On to Module 3, where you will learn about different types of bank accounts. When you know you need a bank account and you have figured out what you need it for, then you are ready to become a bank customer. But what kind of account do you need to open? Checking? Savings? We will cover the main types of bank accounts so you can understand the benefits of each and determine which account will be the best choice for your needs. The most common bank account people open is a checking account. The primary reason for a checking account is to handle the day-to-day transactions in your life. When you need money for groceries, gas, rent, the phone bill, or to buy movie tickets, this is the account you access. When you need to deposit a check from grandma or set up direct deposit for your job, this is the account where your money goes. A checking account gives you the ability to write checks or pay bills online. It also includes a debit card for purchases or for cash withdrawals from an ATM. Most people make their deposits into a checking account. These can be checks, cash, direct deposit from an employer, or an electronic transfer via Venmo or Zelle. If you're using a retail bank or credit union, you can go to a branch to make a deposit. If you are depositing a check, you must sign the back of your check, complete a deposit slip, and hand it to the bank teller. You may also use an ATM or your bank's mobile app to deposit checks. If you need to deposit cash, some ATMs will take a cash deposit, but most people deposit cash at a bank branch. You will also need to make withdrawals from your checking account to pay bills and put cash in your pocket. If you just need cash, you can go to an ATM machine and use your debit card to withdraw the amount of money you need. If you need to pay a bill or transfer money, you can write a check and mail it, use online banking to send it electronically, or use a money transfer technology like PayPal, Venmo, and Zelle. You can only withdraw funds up to the total you have in your checking account. If you pull more funds out than you have, your bank may honor these transactions, but will most likely charge you a fee. Overdraft protection will help you out in this situation, which we will discuss in more detail as it relates to your savings account. Finally, most checking accounts allow for unlimited number of transactions, both for deposits and withdrawals. The other most commonly used bank account is a savings account. A savings account is set up mostly to save money. That's why it's got the name. Most people use a savings account to set aside funds for a big purchase like a car or for emergencies. These accounts are different from checking accounts because you cannot use them for day-to-day transactions and you earn interest on money in the account. You can pull funds out of your savings account using your ATM card or transfer funds to your checking account. Many banks limit the number of times you can draw on your savings account, usually up to 6 times a month, unlike checking accounts, which typically do not have limits. Savings accounts are also used to protect your checking account in case you're caught in an overdraft situation. Banks will usually tie your checking and saving accounts together so that if by accident you overdraw or spend more than you have in your checking account, money will automatically move from your savings account to cover the difference. There's usually a charge for this service and it can be pricey, so you shouldn't do this on a regular basis. But it's good to know you have this protection to ensure all your bills are paid on time. In conclusion, managing accounts has never been easier with digital access. Setting up accounts for specific purposes builds your financial acumen. And finally, bank accounts help create accountability for deposits and withdrawals, which will help you budget in the future.